Warning, only watch this video if you're new to options trading, and I mean 100% beginner, because I'm going to share the first options trading strategy that I use, and I still use it today because it gives me a 50% annualized return. Okay, now that we only have the beginners left watching this video, let me just say that this strategy works for stocks that are priced at $5 per share, which is great for beginners because you want to start out small without risking everything so that you can build up some experience. So then eventually you'll move it up to higher price stocks. But don't worry, it's actually pretty scalable because like I mentioned, I still use this strategy today. And it works for low price penny stocks, mid-range stocks, even the blue chip stocks like Apple, Amazon, Netflix, and Google. Alright, let's get to it. Before I share and explain basic strategy number 1 for making money trading stock options, let me take 60 seconds to describe the basic components of a stock option. A stock option is a contractual agreement. So think of a contract or a document between two parties. In this case, there's going to be a seller of the stock option contract and a buyer of the stock option. Next, a stock option is bound to or refers to 100 shares of stock. The company stock that is associated with the stock option is known as the underlying stock. So for this example, the stock associated with the stock option is for company ABC Incorporated. The expiration date specifies when the option contract expires, and the specific time is at the market closing bell for that day. The strike price is the price that the seller and the buyer of the option agree to use for the execution of the option contract. Now that you've got a basic understanding of what a stock option is, right? It's an agreement between a buyer and a seller to trade an underlying stock at an agreed upon price, the strike price, on or before the expiration date. I'll describe how I sell the option contract to generate an income. I'm going to use myself in this example of selling a covered call. Now I'm going to create a covered call option contract. I'm going to use an underlying stock, ABC Incorporated. I'm going to specify a 1-month expiration date, and I'm going to put a $100 strike price as part of this option contract. And the reason I'm able to write this covered call is because I actually own 100 shares of ABC Incorporated, the company's stock. So this allows me to use that as collateral against the option contract. Now that I showed where a covered call option contract originates from, let me now share a fictitious example and walk you through a covered call option trade. We start off with me on the left and the stock market with buyers on the right. Now I'm going to create a covered call option contract. I'm going to use an underlying stock, ABC Incorporated. I'm going to specify a 1-month expiration date, and I'm going to put a $100 strike price as part of this option contract. And the reason I'm able to write this covered call is because I actually own 100 shares of ABC Incorporated, the company's stock. So this allows me to use that as collateral against the option contract. Now, once I've done this, I offer it for sale on the stock market, and then an interested buyer will let me know that they want to buy my option contract, and so they're going to be willing to pay the premium for that option contract. So I receive the premium, and the buyer then takes ownership or is retained or is associated with the option contract. At this point, now I have to sit and wait for the expiration date. And now let's skip forward 30 days to the expiration date and look at what happens. It's going to be one of two things. So the first result is the market price finishes above the strike price. So in this case, the option contract is going to be exercised. And so my shares will get assigned to the buyer, and I'm going to receive payment for those shares. And I get to keep the premium. Now, the other result could be that the market price finishes below the strike price, in which case the option contract is going to expire worthless. And I'm going to retain the ownership of those shares, so I don't have to give them up. Plus, I keep the full premium that I received for selling the option contract. So let's now take a look at the two possible results from me selling a covered call option contract. Outcome number 1 occurs when the market price finishes above my strike price, in which case my shares will get assigned to the buyer, and in return I'll receive payment for my shares based upon the strike price. Additionally, I will keep the full premium payment that I received for selling the option contract in the first place. The second outcome happens when the market price finishes below my strike price on or before the expiration date. In this case, the option contract will expire worthless. And as a result, I'll retain ownership of my shares. These are the shares that were reserved as my collateral and allowed me to write the covered call in the first place. Additionally, I'll keep the full premium payment that I received for selling the covered call. To help illustrate this point, let me share with you a quick example where I sold a covered call. Now for this example, I don't own any shares of stock, So the first thing I need to do is purchase some shares of stock and then immediately turn around and use those shares to sell a covered call option contract. Now, if you already own 100 shares of a particular stock, you can obviously skip step number 1. Now, before I can sell the option contract, I need to pick the expiration date and the strike price that I'll be using. And then after my option contract gets filled, I'll get paid the premium, which is mine to keep regardless of the outcome of the option contract. I open my account history, and here we can see the actual transaction where I used a limit order to purchase 200 shares of Snap Incorporated, symbol SNAP. Now, I submitted this order on November 1st, and it was filled later that morning at 10:40 a.m. Pacific time. And as you can see, my cost basis is $52.96 per share, and so my total cost was $10,592. At this point, I now own 200 shares of stock symbol SNAP, and I can use them now to sell a covered call option. Let's jump back into my account history and take a look at the actual transaction record where I sold the covered call option. So you can see that I'm selling a covered call for stock symbol SNAP with the $53 strike price and an expiration date of November 5th of 2021. So that makes this a 1-week option contract, but technically it's really only 4 days. So I submitted this order on November 1st, and it was filled later that morning at 11:39 a.m. Pacific time, so less than 1 hour after I acquired these shares. So when these 2 option contracts got filled, I received $1.27 per share, making the total premium payment that I received $254. Now let's jump forward in time and find out what happened on the expiration date. Here's a daily chart going back for 3 months, but I want to focus on the expiration date of November 5th. And just as a quick reminder, for this covered call option contract, I have selected a strike price of $53. And here we can see that the stock closed at $53.17. With the closing market price above my strike price, it means that my shares will get assigned to the buyer. And my profits will be from the payment I receive for my shares that have the capital price appreciation, plus I still keep all the premium payment that I received. To help us better track what has transpired and visualize the actual numbers, let's use my Picking Stocks for Options Analyzer, PS40, that I'll be featuring in my upcoming live training session. So with the Analyzer tool, I just simply fill out these 5 different fields. The stock symbol, in this case SNAP, expiration date of November 5th, the strike price of $53, and the premium amount of $1.27. And the last piece of information I supply is my cost basis, so in this case, $52.96 per share. The analyzer updates in real time, and we can see the numbers below. So this is a covered call for stock symbol SNAP. And on the expiration date, this stock closed at $53.17 per share. Now, because I had 2 contracts in play, there was a total of 200 shares, and the total value of these shares at the time of expiration was $10,634. And with a November 5th, 2021 expiration date, that made the length of this option contract 4 days. Now, I had picked the $53 strike price and received $1.27 per share in premium. With my cost basis per share of $52.96, it meant that my total cost basis was $10,592. Now, even though the stock closed at $53.17, because of my strike price of $53, my total price appreciation profit was only $8, which is just under 1/10 of 1%. However, I did receive $254 in total premiums, which represents a profit of 2.4%. So my total profit for this 4-day trade was $262, and that's a return on my investment of 2.47% for this short, under 1 week option trade. So when I'm trading covered call options, my goal is to try and get a return of my investment of at least 1% per week. And if I can get 1% per week, that means I'm getting an annualized return of over 50%. I've found that one of the keys to profitable option trading is being able to pick good stocks to work with. I've stated this many times that profitable option trading begins by picking good stocks. And as an option trader, you already have experienced the challenges, stress, and risks of picking a stock to use for your options trading. When investing in trading, it doesn't matter who you are or how much money you have. No one wants to lose money on a trade. To manage my fear, uncertainty, and doubt, I use a simple 3-step process to pick my stocks for option trading. In fact, I'll be hosting a 2-hour YouTube streaming session and demonstrating exactly what I do live and on camera. I'll walk you through each of the 3 steps. I'll share the websites that I use for research, And I'll also show you the tools I use to review and analyze each stock. Plus, I'll show you the exact buttons I push during this free live webinar. So be sure to register for this event so that you'll be notified with the final details, and I'll send you the special link to access this webinar for free. To register, just visit my website, simpleoptiontrading.com/picking stocks for options. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.